Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. Joining me today would typically be the mayor, the governor himself, Mr. Michael Becker. Unfortunately, he is on another due diligence assignment. One of the things I wanted to bring up to your attention first, don't forget, October 24th, 25th, come to the 2019 Old Capital Multifamily Conference in Dallas, Texas. October 24th, 25th. Please write that down. I don't care if it needs for you to come by a Southwest Airlines jet or American Airlines jet, come to network on multifamily issues in Dallas, Texas. Good opportunity to meet some great sponsors, some great limited partners, some great people that surround themselves in the multifamily industry. So if you're looking to get into the multifamily industry or you're an old hand in the multifamily industry, please come to the Old Capital Podcast and give me a personal invitation. Go to theoldcapitalpodcast.com and RSVP to come to Dallas, October 24th, 25th. Looking forward to seeing you then. So in the podcast today, we have a friend of ours. Gentleman's name is Jeff King. He is with Ramey King Insurance. Jeff King with Ramey King Insurance. We're going to talk to Jeff a little bit here, but let me tell you the reason why is because when you go out to buy a property these days, one of the largest line items on the expenses is insurance. And of course, that is increasing almost on a monthly, quarterly, annual basis. And we're going to ask Jeff some of the reasons why, what to look for, what you should know, how to compare insurances, what you should get for coverage, how to handle a claim. We got a lot of questions, and hopefully Jeff has the opportunity to spend some time with us and tell us a little bit about how to shop and what to know about apartment casualty insurance and fire damage, anything that happens to do with insurance. So Jeff King, thanks for coming in and spending some time with us today.
Paul, thank you very much. I'm glad to be here.
Sounds good. So, Jeff, tell me a little bit. How long have you been in the apartment insurance business?
Actually, all my career started in '84, so that's 35 years ago. And we're a general insurance agency, but we're in a college town, so we've always worked with apartments and investors. But actually, in 1996, decided to focus on it, not exclusively, but almost exclusively with the multifamily, and also it runs into schedules of homes and commercial properties as well.
So again, what is your background? Because it sounds like you have, is it a Boston accent I hear?
Maybe a little further south than that, but Texas all the way.
Texas all the way. So first question really is, do I need a broker when it comes to insurance?
Of course, I think you do, but insurance is a very technical subject. I don't think the industry does a really good job conveying that. Most people just think of shop my insurance, call an agent, get it taken care of. But it's very technical, and you need to buy the right coverages and be presented the options to make the correct business decision.
So
and your broker will do it.
Are you an insurance agent or an insurance broker? And what's the difference between the two?
Technically, in Texas, we are agents. Texas does not recognize the difference. But technically, an agent represents the insurance carrier. A broker represents the client. And in fact, we do a little bit of both. But that's the technical answer there.
Okay. So what is your professional expertise?
I do have a certified insurance counselor, certificate. I have several insurance courses provided by insurance carriers. Of course, I have a college degree from Texas A&M.
Gig'em.
And then, I'm also an investor and have been really for 30 years and feel that I know the average buyer's side of the desk better than the average agent, having played both sides of the desk.
So you are one of the largest apartment insurance agents / brokers in the United States. You do a tremendous amount of business. Not only do you cover Texas, but you cover how many other places and states?
We're licensed in 40 more states. Most of our work is Texas just because we're here, but some states we have been active in the last few years is Ohio, Kansas, of course, Oklahoma just being so close to us, a little bit in Florida, and then scattered somewhat after that.
So it's just not strictly local. You are pretty much going all throughout the United States.
It is.
So you have information on that could help us if someone wanted to talk to you on a specific area.
Absolutely. If I don't have it, I can get it.
So how many commercial carriers, called, I guess, those markets, do you represent?
Technically, the agency represents about 200 different markets, but in the real estate field, there's probably 10 to 20 that have value to us at any one time.
And what is a market? What does that mean?
Think of it, there's a couple of different markets. There are insurance carriers, and think of the companies you typically think of, Hartford, Travelers, Safeco. Those will be what we think of standard markets. Then we think of specialty markets that are licensed somewhat differently. There are A-rated markets, but these are markets we access that are real specialty carriers and see it primarily in the multifamily arena.
So if you were to have a home insurance, is that typically the same as a commercial insurance agent?
Not necessarily. Most home agents, they do a good job. And in our agency, we do handle home and auto, but we have a different department that does that. There's an expertise in that. But once you go into the commercial, you really need a commercial agent. And of course, I think as you go into your individual field, as we're talking about real estate, you need a specialist who not only knows commercial, but knows what you do better.
And again, how long have you done this?
35 years.
35 years.
I started very young.
And so a lot of borrowers want to know is how do you get paid? And is it a commission base or a fee base?
Typically, it's usually one or the other. Sometimes the carrier, or most of the time, the carrier pays a commission. It's not paid by the property owner. Sometimes if there's no commission in the program we're writing, then we'll put a fee in it. The fee is very comparable to what the commission would have been. It's not an excess or anything there.
Okay. And so everyone's always looking for discounts. What are some of the discounts that we can get?
In the commercial side, there's no real standardization to discounts. Like in personal lines, in your auto, number of tickets, age of your home, things like that. We don't have that same buildup or that formatting commercial. Mm-hmm. The thing I would suggest for a buyer or an owner of a property is know everything they can about their property, know the updates, know the age of the roof, know what the prior claims or if there's been no claims, but as much as they can know about their property, that can help us literally paint a very pretty picture to take to our underwriters.
All right, let's get into the insurance itself, because I think a lot of people don't understand exactly what insurance covers, what insurance carriers can provide some risk, offsetting of risk on. And so what is typically included in an insurance policy at an apartment building?
The main areas we work in first is property coverage, but think of your property, be it an apartment or commercial, but think of the perils you're insuring against. The main thing we see, fires, of course, lightning. In our part of the world, we get a lot of straight line winds and hail. Hurricane damage, a lot of internal damage, but also general liability. These go from slip and fall situations to even worse situations. Someone gets hurt on the property or their property is damaged by an event. Those actually can be a little scarier because there's no real standardization. If a person had a property that wasn't insured and it was damaged, they would have, say you had a $100,000 investment, and that property was lost to a fire and you didn't have it insured, pretty soon you'd know you lost $100,000. But in general liability, something occurs, you don't really know what you've lost until it's settled. And the insurance company does provide that. They provide the defense, the legal defense if necessary, and to get a situation settled that a person would want to get settled.
So what is not included in apartment insurance?
Some of the things, of course, there are some things that just don't get covered by insurance. Some of the things that aren't automatically covered are flood coverage, which has become more exciting in the last few years since Hurricane Harvey south of Houston. Wear and tear type of situations, Ordinance coverage is something that people don't think about, kind of unique coverage having to do with cities.
Yeah, what does that mean?
Basically, if something happens to a property, typically we'll see if a property is in a non-conforming zoning, say it's an apartment that should be retail, or I'm familiar with one that is multifamily that should be single family, that if a property is damaged, typically beyond 51%, the local ordinance will require that building to certainly not be rebuilt, but actually torn down.
Yeah.
And the ordinance coverage turns potentially a 51% claim into a total claim, which picture a property that's damaged to that 51% line. And without ordinance, there is no coverage for that same claim to the 49% that wasn't damaged. But if a ordinance requires it to be torn down, it becomes a total loss at that point. Ordinance coverage adds that coverage. Another part of ordinance coverage is conforming with new ordinances that have come into play since a property is built. Possibly you might have a property that was built with aluminum wiring, and of course it's got to be rebuilt with copper wiring. Ordinance pays that difference. You have a property that may not comply with ADA requirements when it was built. Now it has to, and ordinance coverage would provide that. That's actually where more people will see a need for ordinance coverage. We don't see that many. We do see some serious fire claims, but they'll see it more so in the smaller claims when they come back to rebuild.
Anything else that's not covered? Probably half a dozen more things.
I could think of them, yes. If I could think of them.
All right. What are Fannie Mae and Freddie Mac asking for coverages typically these days?
They do want replacement cost.
And what does that mean?
Typically, when you think of replacement cost, you're looking for what's the cost to literally rebuild the property, which is a different number. Most of the buyers that we're dealing with and the owners, they know the market value. They know what they paid for it. They know what they could sell it for. But we're really trying to come up with the value, or need to be guided to the value, to rebuild the property. Fannie Mae and Freddie Mac also want ordinance coverage. They want loss of rents coverage or business interruption. They also want general liability and typically an umbrella policy. There's a certain limit of liability. Usually we'll run into a $1 million general liability and typically a $2 million umbrella. They also have a certain set of deductibles they're looking for, and which these are not onerous. They're good numbers. But the main thing they're looking for, they don't want their owners to run into some issue, an uninsured issue that could certainly impair their ability to continue to own and operate that property.
Let's talk about those deductibles again. And what typically is a deductible amount? Is it a percentage, a dollar value, a little bit of both, I guess, depending on the claim? How is that determined, and how does the borrower know that up front?
Most of the programs that we deal with have somewhat set deductibles. We'll see on a typically larger apartment, we might see a $10,000, what we think of AOP. That's for all other perils. This is where fire and theft and vandalism is. We used to see more commonly a little bit higher number for wind and hail. And you'll see that deductible reference as a 1025. The second number is wind and hail. It's a little bit higher. What we're seeing, at least in North Texas, and this is something we see on the coast, and as we talked, as Paul, as you mentioned, the market is tightening. We're seeing deductibles start to increase, where we may have a higher wind and hail deductible. It may be $50,000. It may be $100,000, depending on the property. But we also see percentage deductibles. And typically 1% is very common. But what that means, I've run into customers that thought the 1% was just 1% of their claim. But it's actually 1% of what we call the TIV, the total insurance of value, which is a combination of the building amount, the loss of rents. So if you have, say, for example, a $9 million property with maybe $2 million of rents, adding those two together is $11 million. It's actually 1% of that amount. So it becomes $110,000, which is not a small deductible.
And that's not a small deductible.
Not at all. Not at all. It depends on the property, but it's after a while you get into some real money on those deductibles.
Yeah. So what is an accord? And do you have accords in home insurance?
An accord is actually a standardized form. This is put together, I guess, by Accord. It is a group of insurance companies years ago that all they did was standardize the forms insurance companies and insurance agencies use. But where we see it primarily is that's the main evidence of coverage provided to the bank, to the mortgage people, to the owner, one of which is a certificate of insurance, primarily used on the liability coverages. It will list the name of the customer, the carriers, the policy numbers, our name, the agent, and it'll give just a snapshot of the coverage. You'll see the other form you see as commonly as an evidence of property, or EPI, which is a similar form, but it's designed for property coverage. And instead, many people want to see their policy, which is great, but it's a much easier form to provide a 2 or 3 page document to a mortgage company showing coverages instead of having to provide the entire policy.
One of the things is, if you're applying for a Fannie Mae or Freddie Mac loan, is that the typical Fannie Mae lender is going to have a specific department that handles insurance for them.
Yes.
And so what happens is that you are told the name of the department, and that you want to put that lender with your insurance broker.
Absolutely.
And they want to make sure that the coverage that's required is actually the coverage that you're going to receive. And if there's any language that has to be changed, it's only between the insurance carrier, the markets itself, and Fannie Mae, and the insurance representative of Fannie Mae. They can negotiate that back and forth. But, you want to get your broker involved in early, and we'll talk a little bit about when the broker should come in to the equation. But the accord is what we're seeking, because it proves that you're going to have insurance, what the premium amount is, what the coverage is, and that's what we're looking for to go forward. With your experience in Texas, Jeff, and you've had a lot, what is a typical claim for, and how much is it?
Well, I'll describe 3 different types of claims. We do see a lot of hail in North Texas, and actually that can be from several tens of thousands of dollars to several hundred thousands of dollars on a very large property. Hail is one of those things that if it hits your property, it's going to take the roof of pretty much the whole complex. The second we see is hopefully less frequently are fires. We have obviously kitchen fires, tenant-related fires, electrical fires. The only thing that helps there is usually those will be localized to a building or maybe to a couple of buildings. It won't take the entire property, but it's just as tragic because it usually puts people out of their home, and you have to worry with that, and potentially someone could be injured. Our next claim that we see, of course, is liability claims. And those can be from very innocent slip and falls, stairway related, to assaults and things like that happen where people live. And there's no standardization to that.
Can we kind of go through that a little bit? Because, hail is such a big thing in Texas, in Oklahoma, in Kansas, in some parts of Illinois. There's other things, whether it's earthquakes in California or in mudslides or fires or hurricanes down in Florida and on the Northeast. There's all kinds of different perils that people have throughout the country. But hail down here is probably the most severe because our insurance rates here in Texas are large because there's so many hail events that cause so many roofs to be having to be replaced. Because once you penetrate the shingle, you have the ability to have water penetration inside that property, which could cause not only damage, but also mold issues on the property too. So what typically are you seeing on hail?
Hail is primarily, we see it all the way from Kansas and other states into North Texas and Oklahoma. Texas, one of the issues is considered, you'll hear the term a storm state.
Yeah.
We do have our storms. And of course, any of the coast, the Gulf Coast particularly, is exposed to hurricanes, which actually is the granddad of claims. That'll impact many properties in a region when a hurricane comes through. Going back to Hurricane Ike, almost over 10 years ago, was one of the largest claims we had ever seen. And it continued all the way up into Ohio as a tropical storm, doing damage all the way. Other claims, like I said, we do see fire.
Yeah, let's talk a little bit about fire, because fire is typically just an event that happens, either it's an electrical event from bad wiring or something overloading the circuits, to stoves that people leave stoves on, boiling oil blows over. Can you save money if you install those little canisters above the stove?
You can. There are a couple of programs that I haven't seen it save money. I've seen it negate part of the deductible.
Let's talk a little bit about what those canisters can do.
I don't have as much experience as I'd like, but it works. If there's a fire, the goal is to put out the fire.
Yeah.
And many of these claims, probably over half the fire claims we see, are cooking-related claims.
Yeah.
Someone put a pan on the stove and walks off, gets distracted for a lot of reasons. It's almost entertaining, but it's not entertaining. But these would put out the fire. We do see also most of our insurance companies want smoke. Of course, we have to have smoke detectors, but they want fire extinguishers in a property. The value to any of these, and especially the fire extinguishers, is to try to keep a small fire small.
Right.
And virtually all of our insurance companies require fire extinguishers on the property, either throughout each unit or installed throughout the complex. And one of the headaches I know as a property owner is that when people move, those fire extinguishers might go with them. And you have to replace it. And I know that is a pain. It can be an expense, but it is helping you to have them there.
Tell me a little bit that if you have a fire on one of your properties and you have 2 or 3 units that have been taken down because of the fire damage, what happens to the tenant? Who's responsible for moving the tenants out and paying for their move and all their furniture that's lost in the fire? Who's responsible for that?
It is actually the tenant. Initially, the landlord does not have an obligation to the tenant for their contents. There can be some legal issues if the fire somehow was started by the landlord. Seen a fire started by a welder several years ago, some mini warehouse in this case. But the mini warehouse and the welder became obligated to the tenants or the tenants of that mini warehouse for the damage to their property. But initially, back to an apartment renter, is that the landlord doesn't have that obligation unless they're legally liable. And we see many times, and you can see these on the nightly news, where there's been a fire and people have lost everything, and they have lost everything. And they may or may not have any insurance. And it's aggravating, it's sad to see it, but they could have had coverage for themselves. That's where they need to take care of themselves to a great extent.
Yeah, liability, these slip and falls or anything that's due with the tenants, say, neglect.
Correct.
On their part, does that cover medical for the tenant? How does that protect you as the landlord?
What happens when a tenant is injured or a third party is injured? They will first have medical bills. They can have lost wages. They may just feel like they need to be paid a certain amount for pain and suffering. And as they bring that claim or that demand to the property owner, it does depend on what caused it. But most times when we get that claim, we'll turn it in the insurance company. The insurance company at first will assign it to an adjuster. A part of your general liability is that they are defending you. Should it be handled by an adjuster where it's an obvious liability, or if it requires an attorney to be involved, the insurance company will hire the attorney at their cost. That's actually a very large benefit to general liability people don't initially think of. Of course, you think of as you're working with an attorney to form your entities, just think of that spun around where you have to pay somebody else or pay your own attorney for that in a defense situation. The insurance company will provide that. If it results in a settlement, either in a court case or that they decide it's reasonable to settle the claim, the insurance company will pay that as well.
Is there a rule of thumb with your experience about how much liability insurance, I guess, to have for one and then per occurrence? There's
really not. Unfortunately, no one can ever say what the right number is.
Yeah.
Of course, the right number is at least $1 more than yesterday's settlement, but no one legally can say what the right number is. Most of the time, we're working with a 1, 2, or 3 million limit. Can be larger. One way of looking at it is either looking at the net worth or the net worth of a property or the assumed net worth of the owner. Of course, that's why we do have, or you see most properties are owned by different entities trying to silo those exposures, where a person may have 10 properties, but they also have 10 entities to protect that. But no one can ever say the right number. What we do see, most claims that we see are more of nuisance things that may settle for $2,000 to $200,000, which is not a small number, but it's still not a large number in the millions. But there are certain situations, certain types of claims, fire-related or death-related, that can happen at properties that become much more serious because of loss of life.
Right. So with your experience, how long does it take to pay a claim? Break it down for like fire, hail, windstorm, something that you've seen quite a bit of. And because people are, I know it depends on how fast the contractors are working and the claims people are working, but typically, just kind of walk through it with us.
First, claims never move as fast as we'd like. I see it on my end. The concept of having a claim on Friday and having it checked on Monday just really doesn't exist in the commercial. What we'll run into, it will take 30 to 60 days for the adjuster and the client to arrive at a figure. What we do suggest when you do have that claim, so it's a property claim, to have when you have a claim, a potential claim, before turning it into the insurance company, have your friendly adjuster, your preferred contractor come out to look at your property. First determine, is it damaged? Hail is one of those that it might not be damaged. But then also have them give you an estimate of damage. It might not be as large as your deductible. Don't use your insurance company just to determine if you have damage. Our goal is initially to keep claims from showing up on anybody's report. But first, have your contractor look at it, and if you do have damage, contact your agent. But it'll take a couple of days to get an adjuster assigned, to get out to see the claim, and have your contractor there at the same time so they can help agree to a scope as to how much is damaged. Then have the adjuster. The adjuster will come up with an estimate of the damage. That actually may take several weeks, and it's not that it's meant to be a long period. It's just it takes them time to look that up and get, just as if you were having something bid by a contractor, it'll take them time to get the right numbers. That may take, once that's agreed to, it may be another 30 to 45 days to get a first check written. The adjuster has to report that to the insurance company, to their supervisors, get it approved, and then they will typically pay what's referred to as actual cash value, or ACV. It's the depreciated part of the claim. They'll pay that part first, and that may come, frankly, in 60 to 90 days, which can go by in a blink of an eye, although it won't seem like that. But then once the repairs are made, the customer can then go to the carrier and ask for an additional check, a supplemental check, to bring the claim up to the replacement cost. In this case, it's the total cost of the damage. That depends on how long it takes to get the work done. I've seen claims go for 2 or 3 months to a year plus. What can happen in a very large claim, say you do have a fire where a building is gone, the owner then has to go before their local city, get permits, get approvals, things like that, and they're at the mercy of their local city. But once the repairs are done, they can get that supplemental check, which may take another month just to get it issued. Unfortunately, it just doesn't go as fast as we all wish it would.
Is there any difference between a fire claim, a hail claim, and a windstorm claim?
Really not. A fire is probably, since it covers the whole building, it's just more destructive and will involve multiple contractors or types of subcontractors. A roof claim from hail is typically the roofer, maybe there's siding, windows, but it's usually, where it can be equally as big, it usually doesn't involve that many different businesses to get the work done.
I don't know if you had a chance to, I was on the internet and I saw Rod Khleif, and Rod Khleif is a podcaster, also is an investor in some properties. One of the properties that he had, and I don't remember where the heck it was, because he was doing a video of it as he walked up to it, was hit by a tornado. And I think maybe it was in Ohio or something like that, but the entire building was almost destroyed. Pieces were destroyed. So if you were an owner like Rod Khleif and his group, you'd go there and you probably wouldn't expect to have insurance proceeds hitting your door for several months.
It may be several months.
Yeah.
And that's, it is critical, but it's not as critical for property. But the other part, you've lost a stream of rents.
Well, let's talk about that, because who pays my mortgage during the claim?
Ideally, you still do, but most of the time you're going to need help from the insurance. Insurance is we also offer, you'll see it offered as either loss of rents coverage or business interruption coverage. Most of the coverage used to be loss of rents, which is pretty straightforward. You've lost units, you've lost rents from those units, here's the rents and they pay it. What we're seeing now in the business interruption is this business interruption coverage is typically what most businesses have. It is designed to actually replace lost net income plus continuing expenses. So it's not just answering to a total sales or to a rents number. What an adjuster will ask for, and frankly, they typically try to do this after the units are occupied, and they will ask for what was your business during this time period compared to what your business was last year in a previous time frame. I've seen loss of rents being less critical, and the example I always use, if a person, there can be situations where properties are damaged, but there's actually not loss of rents, and which that doesn't make sense. But what I'm talking about, if a person, say, is a 100-unit property, is historically 90% occupied, and they lose 10% of their units to a fire or whatever, most landlords will take those tenants, wanting to keep the tenants, and it's the right thing to do to move those tenants to the vacant units. Say they move those same tenants to the same 10 vacant units. If those 10 units were not going to be leased in a future time frame, you can argue that the apartment actually had no loss of rents.
Right. So make sure that we explain that correctly, because that's an important thing. And I'll give you an example, is that before a fire were to happen, and if you were 90% occupied and that you did lose, say, 10% of the units on the 100-unit building.
We're playing math today. So.
You're going to show a rent roll, and that rent roll is going to, before the fire, is going to show 90% occupancy, 10% vacancy. And after the fire, it's still going to be, realistically, it's going to be 10% vacant, and then 10% that is vacant due to fire. But how the insurance company is going to look at it is it was 10% vacant before the fire and 10% vacant now. So they're not going to pay you.
That can happen. Having said all of that with claims, and I know the insurance industry doesn't develop a good reputation, but they really do want to pay your claim. The adjuster, while it may take longer, as we've discussed, they really do want to pay it. They do want to get it settled. They want all parties to be happy. But claims create a very tough situation for business owners to go through.
That must mean they want to settle your claims because they also want to make sure that your premiums don't go up, or are they going up?
Premiums have a way of sneaking up, unfortunately. Most rate increases we can see if a person has a property that's had a couple of different claims. Insurance companies, of course, stay in business by hopefully breaking even on their claims. The insurance business for the insurance carrier is actually a very thin business. Mm-hmm. Although the premiums can be very high, and we're as an owner myself, I pay premiums and they seem high enough, but it's actually a very thin business for insurance companies. When a claim occurs, they use that trying to determine if in the future will a claim occur as well. And you may see some adjustment. Now, a good agent may be able to find a different carrier or move around to help negate that. But one of the biggest things when we see large moves in the marketplace where rates increase just across the board.
And you're seeing that right now in Texas.
We're seeing that right now.
And by how much?
We're seeing it can be anywhere from 10 to 20 or 30%.
From last year to this year?
From last year to this year. It depends what we're seeing. Once again, Texas is a storm state, but we've seen in the last 2 years a lot of claim activity with hurricanes and storms across the nation. And with that, we're seeing a lot of movement. It's actually rates, but it's also lack of capacity. When things happen like this, it's where insurance carriers are backing away from what they insure. They may not insure something. They have different deductible configurations. They lessen their appetite for a certain type of risk, which can result in rate, but it results in lack of carriers to provide the coverage needed.
Is there anything that I can do to avoid my annual insurance premium by going up?
Well, with claims, if you can control the claims, do control it. We've just mentioned a couple of risk management and safety factors. Install those. Also, to help your agent know about your property, know about your updates, do your upkeep to your property. Like I said, with small claims, don't turn them in. I know that's painful, and you hope to have not too many small claims during that time period. But if you can afford to handle them internally, so a claim doesn't even come to the carrier.
So to keep the like my home, I have a large deductible. Can I have a large deductible on an apartment building? And does Fannie Mae, Freddie Mac have a problem with me having a large deductible?
The answer, yes, you can. The mortgage company and Fannie Mae and Freddie Mac typically either have 1 to 2% of valuation maximum. I believe it's 1%, but I've seen as high as 5% where it was approved. Now, that's a pretty sizable deductible. My suggestion is to find as high a deductible, not ridiculously high, but find as high a deductible as makes sense to you as a business owner. And that could be if you have I've seen a $30 million property with a $25,000 deductible, and that's proportionally a very low deductible for that size property.
So where do you see gaps in coverage?
We've covered some of them. It's not so much gaps. Some of the issues that we do run into, we've talked about deductibles where people misunderstand their deductibles. We've talked about percentage deductibles where people understand how that percentage applies. Replacement cost coverage, that's something that in theory should be addressed as costs go up. Insurance companies do a fairly good job of keeping us abreast of that. But actually the valuation actually falls originally and continually to the owner of the property.
Yeah, we talked about that rental loss income coverage. Yep. When is that actually paid to the owner? Is that paid at the end, paid during the claim itself? It
is ideally paid at the end, but
so during the period of time that you're working on the property or the fire happened 6 months ago, you're not receiving any income.
You typically they're looking to replace it at the end, and the reason being they'll know what the actual loss was, the loss of rents.
Yeah.
But if you know you're going to have losses, and the adjuster understands that, you can go and get a supplemental payment during the time paid.
Going back to having an inspector take a look at the property, and you talked about having a general contractor. How about a public adjuster? What is a public adjuster, and do you recommend having a public adjuster?
It depends. A public adjuster is someone that the customer, the owner of the property, actually hires to adjust their own claim. We've seen good and bad. There are good, like in any trade, there's good and bad. There's good and bad insurance agents. But I've seen people use public adjusters. One of my largest clients uses a public adjuster on any large claim he has because he's using the expertise of that adjuster to handle the claim. The public adjuster is designed to get the most value out of the policy for the owner. My suggestion, if you do hire one, and many people do, and I know many of the public adjusters, is to help keep the claim going. I've seen certain situations where it can become very adversarial with lawsuits threatened, and while there's room for that in any type of industry, but
does the carrier provide the adjuster or does the agent provide the adjuster?
Typically, the carrier provides the adjuster handling the claim, but the client pays for the public adjuster.
I see. Okay. So a lot of people that listen to this podcast are kind of sometimes newbies into buying properties. And so one of the things that they always ask for is, when do we get you involved in quoting the transaction? Because again, insurance in some areas of the country could be on a per unit basis, $200 annually for a unit. And then some areas of the country, it could be $300, $400, $500 annually.
That's correct.
Per unit. In some places, $700, $800. And so
absolutely,
sometimes you can go off of the seller's numbers, but sometimes you don't know where that seller got that number from. We're going to come back to that in a second here. When do you usually get involved?
There's 2 or 3 good spots. We like to be involved very early, and we offer, in our case, a service to work an indication for someone when they're just looking at the property. They're looking at the realtor's offering. They've not decided if they're even going to make an offer for the property, but we can take at least some of the information available and come up with some working indication on the premium. But certainly once they either have an LOI accepted or certainly a property goes into contract, we need to know about it, or even if they feel very confident their LOI or contract is going to be taken.
So what do you need to kind of get going to get an insurance quote? And one of the things that we do all the time is we hear 5-year loss runs. And what does that mean, and what else are you looking for?
With loss runs, what a loss run is actually a form that comes from the current and previous insurance carrier. It'll be the carrier. It'll have their name on it, policy number, location, time period, typically an annual policy, and it will list what claims actually happened.
Yep.
And we try to build 5 years. The reason being the carrier is trying to predict future claims based on prior experience. I look at a loss run, and we do have some difficulty getting it. Everybody does. But I look at we'll have properties that may have no claims, and most don't. But I look at a loss run as like when you go to the lender, and the lender knows you have good credit. You know you have good credit, but they're going to order a credit report just to have in the file. And sometimes there's something on that credit report nobody knew was there, gave them something to talk about. But back to other things we need to quote, we need as much information you have about the property, certainly address, square footage, annual rents, valuation, if there's any requirements. We are seeing, while we're talking about replacement cost, we're seeing some of the values, and certainly in Texas, I'm sure many of the other parts of the U.S. where the market value and the purchase price is higher than the replacement cost. We're looking for update information, the age of your roof, any electrical, plumbing, heating, update information. You can gather a lot of that if there's a listing realtor. Many times there are. They'll have that. The realtor would see the property. Of course, you can gather it yourself, or as you approach due diligence, you really do need that. There's always more information, unfortunately, that we can use.
So personal financial statements or credit reports, do you pull that at some period of time to kind of see how strong the sponsor is?
We actually don't. It's now the lender probably does, but from an insurance standpoint, we don't. We do see that in personal insurance, where most personal insurance carriers, they are not using a credit check, they're using credit scoring. But that's something we see in small commercial and personal lines, but not so much in what we do in real estate insurance.
So we kind of talked a little bit about the number of carriers that you represent as a broker into the transaction. So you cover, say, 200 different carriers that you represent.
Correct.
When you talk with a borrower and just being prudent, is it good for a borrower to talk with one broker, two brokers? Where does the diminishing return come from? Because I would imagine that you kind of know, since you have thousands and thousands, you're one of the largest agencies in the country, that you kind of know who is doing insurance in these certain markets. So if you get other brokers involved, tell us a little bit about covering markets.
What is it can become an aggravating point, but most insurance companies will only deal with one agent at a time, and it's typically the first one in. And what we do see in our market, if you're dealing with specialty agents, and say if you're dealing in specialty multifamily agents, one or two agents will cover that market almost as good as you can be. And that say if you went to 5 different agents, there may only be 4 or 5 carriers that will really compete for your business. And if those agents know what they're doing, and they will, it's going to be a run to get to those 4 carriers. They may end up using only those 4 carriers, but whoever gets there first will have that carrier. Now, a customer can reassign that using a broker of record. But typically 1 to 2 agents, if they're good agents and know what they're doing, is literally enough. But we do see people using multiple, and it just confuses the issue. Occasionally we'll have an underwriter. Yeah,
it confuses the carrier underwriter is who has control of the deal.
They do.
And so agent A brings the deal into this carrier, and then agent B brings it to the same carrier. Well, agent A is going to cover that market, and so agent B is not going to even get a quote.
That's correct.
On the deal. And so, if you start to get, 4, 5, 6, 10 insurance brokers out there, you're not helping yourself.
You're not helping yourself. And I have seen situations, because the underwriter, they deal with all 4 or 5 of the agents on a continual basis, and they want to do the right thing. And at a certain point, when they're seeing it from that many agents, they're going to say, you know what, no one controls this. We may not need to quote it at all.
Tell me what a master insurance policy is, and how would someone get into that?
Various terminology. A master policy, a lot of what we do and we access are risk purchasing programs, which effectively is a master policy in itself. We access 4 or 5 of these programs, maybe more than that. The other part is when you take several properties, and like a property manager or even a person that owns several properties, and they insure them all on one policy, there is value to that because you're taking a bigger picture to an underwriter. There may actually be a spread of risk. There certainly is from fire, that you're taking a bigger picture with more of a spread of risk to an underwriter and may be able to get a better price. We do all of that. I've seen a lot of folks use their property manager's policies. A property manager may put a policy together, and many of the good ones do. We provide that as well. The pro, you do get some, maybe, I don't know about a volume discount, but you get the ability to use their expertise. The negative, I can think, you don't have an agent. You have their agent as an owner. And some people don't want to be involved in their insurance. They're taking their property managers, making the right decisions. Other people want to be in control of their insurance. It can certainly affect their livelihood.
Yeah. So again, what that means, the master policy is the mitigation of risk is that if you as one individual go for insurance, the insurance carrier is just going to have you as the client. If you in typically a large management company, let's say, has 5, 6, 10,000 doors, they can go under a master policy and they can have all their doors under this one policy at one period of time, and they spread that risk to other areas. It's still all the properties are in Texas. There's a certain amount of risk there. It's not spread typically throughout the country, right, but you can typically get it reduced. But again, then you're dealing with your management company's insurance company, not your company, your own personal insurance agent. So you got to take the direction from the management's insurance agent.
What can happen even on master policies, there can be standardization to the rate, but there doesn't have to be. You can have 10 different properties on one policy with 10 different rates. Don't see that much, but they don't have to have the same rate. Each property may have to stand by itself anyway from an underwriting
That's right.
standpoint.
How often should an agent communicate with a client, and what's normal?
I would say a couple of times a year. Most people want to handle their insurance. They may not love their insurance. We understand that. It's very technical, but they need to have a feel of what their insurance is doing or not doing a lot of times from a business standpoint. But I'd suggest a couple of times a year and at renewal.
Will the carriers come out and take a look at the property too, just to check the quality of the asset? Does that happen very often? It
does. Not as often as it should. Typically, they don't pre-inspect. Occasionally, we'll run into that. But most of the time, once they write a policy or once they write insurance on a property, then they'll inspect the property and typically may create some suggestions or recommendations is what we call them.
So we talked about fires and the tenant's contents are not covered in a fire on the property. So your neighbor may torch the property on fire and your contents are in there, and that's not going to be taken care of, insured. So do you also provide insurance for the tenant, and what does that usually cover?
Yes, we do. There's a couple of formats. You'll hear it referred to as a renter's policy. We do make it available. I've heard many times that the average tenant, a very high percentage, don't buy renter's coverage. I know there's a move in the landlord business to require that as moving in, which they should, but there's not a way of policing that after the fact. But effectively, a renter's policy is the same policy as a homeowner's policy, except there's not coverage on the house. There's contents coverage, there's loss of use coverage, but there's also personal liability coverage. And this is where if a client or a tenant has that kitchen fire, their property coverage is going to address their contents, but as to addressing the landlord or the damage they do to the building will be the personal liability policy. Mm-hmm. Those are sold individually just to the tenant. Another option we work with this is a blanket policy, a blanket renter's policy. This is a policy purchased by the owner. Ideally, it's designed to be back charged to the tenant. The couple that I've seen are they're limited to what they pay, and they're limited actually to the dollar amount they pay. They're originally trying to address the 4 or 5 major perils that we run into from tenants, fires, things like that. And they're usually trying to address what would be a deductible on a property policy.
If we force tenants to have contents insurance or fire insurance on their units, can we get a lower premium on our insurance?
I haven't seen it as yet. I've had that discussion recently and have not seen it formulate. I would hope at some point that would come in as these master renter policies come into place. They're a very useful tool. They're not particularly inexpensive. They're inexpensive per unit. It might be $100 per unit, but if you have 1,000 units, that's $100,000 a year. Mm-hmm. And if I'm doing that right, I think I am. But if you back charge your tenants correctly, then hopefully that cost goes to the tenant without staying at the landlord.
So what else do I need to know that we didn't cover here?
We've covered a whole lot. I'm sure I'm missing some good things. I really suggest owners of their property know their property, know the ages of the updates, and it can be difficult in a purchase situation or a property that's been sold a couple of times in a few years where the owner 5 years ago is not there. But when you're buying the property, when you're doing your due diligence, when you're having your people inspect the property, find out the wiring, find out age of this. If you have a property that possibly was aluminum wired, and many are built in the 60s and 70s, find out when that property was pigtailed. Your agent's going to want to know those dates. Find out your updates, electrical updates, and keep your property up.
Any funny stories in the apartment insurance business, Jeff?
I can think of one. The one that comes to mind, we had one several years ago when a tenant put some bug bombs in a closet, put 3 bug bombs in the closet. Mm-hmm. When he opened the door, it blew him halfway through the wall. And
it was a bomb.
It was a bomb. And we see odd things that happen, not continually, but you wonder, how did this happen? What happened here? But that's where people live. Strange things happen.
Yeah, Jeff King with Ramey King Insurance, and Jeff has been in the apartment insurance business for over 35 years. Ramey King is one of the largest agencies for insurance on apartments. They are specialists in apartment insurance, and they cover over 40 states. And see if he can insure in your area. So, Jeff, what's the best way for somebody that wanted to get more information about what you do to get in contact with you?
Our various contacts, our website, RameyKing.com, RameyKing.com, or email info@RameyKing.com. Also, our phone number, 800-453-9691. And may contact us at any stage of your ownership, purchase, long-term ownership. Glad to help in any situation. I enjoy doing this business. Obviously, I make a living in the insurance business, but also being in the real estate business and the ownership, I know what this can do for people's net worth, and I enjoy seeing that.
Yeah, Jeff and I have been friends for over 12 years or so, 10, 12 years, long period of time. He has insured a lot of our clients, and so he does a very good job. Again, that's a Boston or New York accent? I always forget.
Texas, all of Texas here.
All right. That was Jeff King with Ramey King Insurance. I'm Paul Peebles. Have a good day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.